Welcome to the 2024 Economic Preparation and Depression channel. I'm your host, Tony. Thank you for joining me on this brief Sunday edition, November 17th, 2024. Please be sure to hit the like button as we continue to interpret financial news as it becomes available. I appreciate everyone's support, ladies and gentlemen. Hope you're having a wonderful Sunday. We're going to get right into it. Right now, we're looking at an article by CNBC. Restaurant executives can't wait for, quote, 2025 after slow traffic and a wave of bankruptcies. The retail sector has been hit hard, but more so the restaurant and hospitality sector has been hit very hard in 2024. As you know, we've had a lot of recalls with food and a lot of recalls with different foods, with E. coli outbreaks, and with McDonald's, and with the meat, the boar's head fiasco that happened earlier this year. So restaurant bankruptcy filings are soaring. Traffic decline. Many people are deciding to cook at home or go to other areas, other food places, whether than fast food or retail, quick retail food restaurants, and the same store sales are disappointing. And remember back in the day, 20 or 30 years ago, you can go to a Ryan's or a Golden Corral buffet or a places like that, but the quality has gone down tremendously. Even Pizza Hut, back when they had the red roof, was like the best Pizza Hut ever in the 80s and the 90s. Now, Pizza Hut, even the quality's gone down from those places, Domino's, Little Caesars. So the quality's gone down, prices have gone up, people are getting smarter. Especially with this dynamic pricing thing that some of these fast food places like Wendy's have and all that stuff, and robots are making your food. So people are eating at home, but they're starting to cut back on eating out maybe once a week instead of, when they were going out to lunch at the office every day or whatnot. So bankruptcy filings have soared more than 50% so far in 2024 compared to a year ago. And this is concerning. From chains from McDonald's to Starbucks have disappointed investors with same-store sales declines for at least one quarter. So, even places like Shake Shack was a hot place back in the day, a couple years ago. You remember back pre-pandemic, all these stocks were going up tremendously. And now it's starting to hurt. Higher interest rates have hurt in the last few years, even though they've started to build up new stores, according to CFO Katie Fogarty. But she's expecting a big boost in consumer confidence as rates fall. Well, interest rates, that's the problem. Interest rates are not falling as fast. And even places like Kava, they're starting to see less foot traffic here. Panera Bread, once again, all these stores here are filing for IPOs and stuff, but they're not seeing the growth that they normally would see tremendously here with everything going on with this thing here. So, but one bright spot, the solid U.S. retail sales, according to Reuters.com, underscore economy's, quote, resilience. Well, now that we know that the Federal Reserve Bank may hold interest rates steady going into December, it's possible that the stock market is not going to like that. They're hoping for more rate cuts and more easy money. That may not be the case here now that we have retail sales that are holding us up here. And this may be true because every holiday season, people want to get gifts for their loved ones, take trips, because this time most people either take those vacations end of the year to use what time they have, paid time off or whatever. And so you can expect a surge, a little bit of a surge. It only increased 0.4% in October. So September sales raised from 0.8 to 0.4%. So, but core retail sales dipped only 1%. So basically kind of flatlined, but it did grow a little bit, less than half a percentage point. Fed Chair Jerome Powell said on Thursday the economy is, quote, not sending any signals that we need to be in a hurry to lower rates. So this signals to me that the next meeting in December, which we have coming up here in about, 2.5 weeks after Thanksgiving, December 6th, something like that, around that time frame, he's looking to hold rates steady. So we're not getting a rate cut in September. That gives us going into 2025 a little lull here after the holiday season, late January, February, as people, recuperate from the holiday spending and get back on track again. And so retail sales, we'll have to see how that goes. Another thing is auto dealership sales have been flatlining for the majority of the country out west and out east and the Midwest as well. Now, sales of electronics and appliances, that rebounded 2.3%. That's good news. People are still buying those TVs, those computers, laptops, those special electronics, iPods, stuff like that. And of course, other things. But the thing is, the expensive inflation is outpacing all of the wages, and this is going to be a big problem in the next 1 or 2 years. Motley Fool had an article, if you're unhappy with your 2.5% Social Security COLA for 2024, here's the smallest COLA to put that on perspective. So, people may scoff about that, but at least we're still getting somewhat of a COLA. A lot of people in a lot of other countries are not getting a cost of living adjustment at all. Now, we know that this does not keep up with inflation, obviously, but something is better than nothing. And millions of Americans, older Americans, are experiencing that. The outcome could have been much worse. for Social Security benefits here, and or Medicare or disability benefits or pension benefits, whatever type of benefits you're getting. We know that the COLA hasn't kept up with inflation for the last 35 years, 40 years. But the good news is that at least we're still getting a COLA, a 2.5% COLA, getting something to help ease the pain of the inflation that's continuing to grow here. And looking at the future economic calendar here, you can see we have housing starts coming out on Tuesday, building permits, get a look at that. That remains flat. Initial jobless claims coming out on Thursday, just before Thanksgiving, heading after next week, on November 21st. That's forecast to show somewhat of a decrease by 2,000. We'll see how that goes. And existing home sales go down too as well on Thursday. We look for that to go down as well. So there's a lot to look forward to as we try to round out the fourth quarter here of this economy. So continue to prepare. We're not out of the woods yet. The good news is that we're starting to get back on track with spending, and we're starting to cut out the unnecessary fat, trim the fat here, as they would say, throughout the years. And the retail spending is up, but it's not up as much. So people are being very discerning in their choices of leisure spending and gift spending and discretionary spending. So that's what we have to say for today. God bless for this weekend. Enjoy. Get some time out in the sunshine or in the clouds. Enjoy your family and friends. And I'll talk to you after Monday. God bless.